Bloomberg Audio Studios.
Podcasts, radio, news.
This is the Bloomberg Surveillance Podcast. I'm Tom Keene, along with Paul Sweeney. Join us each day for insight from the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.
We are thrilled. Emily Roland here with John Hancock of Boston. And I should also point out she's got the best call, which is just own America, own quality.
Boom, I'm down with that.
Stop screwing around. Do you stay with that theme?
We do, Tom, and it's really all about following the earnings and following where the best fundamentals are
Following
across
the cash
world.
flow.
Follow the cash flow. And not only are we seeing U.S. mega cap tech companies, yes, they're overvalued, but they're doing the bulk of the heavy lifting right now as far as earnings growth goes. It's a key reason that we've had a preference for U.S. equities. We're also following where the money's going. We are spending like crazy in the United States right now. Not a political opinion, it's just happening. And it's really unusual that we're employing fiscal stimulus and increasing the size of the deficit at a time where the unemployment rate is less than 4%, but it's being funneled into industrial production. There's a manufacturing renaissance taking place across the U.S. Midwest right now. So we're playing that by emphasizing things like mid-cap industrials in portfolios.
So we're pretty much, 80-85% of the way through earnings here. What have you seen so far that's either giving you conviction in that call, or maybe you said, we got some headwinds?
Yeah, earnings have been okay. They remind me a little bit of my son's grades. He's in 8th grade.
Don't go there.
His report card's not very good, but he's still on the lacrosse team right now. Go Marblehead. They've been fine.
Mm-hmm.
But when you look at it, it's almost like I picture like a glacier, right? You know how only the very top part of it is showing. And it's really those mega cap tech names, communication services, consumer discretionary. Those sectors are up 30-40% year over year, handily outpacing the S&P 500, which broadly is up only about 2% when you take those sectors out. So earnings has been fine, but again, they're dominated by select groups of companies.
So how do you think about valuation then? Two ways to look at it. One, you just kind of look at the broad market. Maybe we're a little bit rich. Yeah. A lot of folks say, hey, pull out some of those magnificent, however they are, and we're okay. How do you guys think about it?
Yeah, it's really about a balance. So we have a valuation issue with those mega cap tech names. In fact, right now, the S&P 500 growth index is trading at a 45% premium to its 20-year average. So we still like tech. We're not downgrading it, but you've got to balance that with stuff that's actually trading on sale.
John Hancock, with his venerable tradition, actually sticks to prospectus. Are your large cap portfolios forced to sell big tech because it's gone up so much?
Well, that's a big problem for active managers because it's hard to be overweight those stocks. So I think there's some limitations there as far as sector construction. What we're doing is we're balancing that with carefully selected parts of value. Think of it as like quality at a reasonable price. Those are the types of stocks we want to own, ones with great balance sheets, tons of cash,
I don't mean
great
stocks,
return on
sectors.
equity.
Give me sectors, come on.
Yeah, so we're overweight the information technology sector. We also like things like industrials, which we talked about, which have good earnings prospects. They're high quality, great return on equity. We do like healthcare. Sometimes I don't love talking about it because it's been an area that's
why won't
overlooked.
healthcare finally go? You and I were younger, Paul, when people started talking about this. Why won't healthcare pop?
I think you just need to see that rotation into more defensive parts of the market. And think about what's outperforming right now. You look at Bitcoin, crypto miners, small cap equities, Chinese equities. It's like there's this massive momentum trade that's been spurred by this risk on sentiment. And it's really been just around the Fed hinting last fall that we were going to cut rates, and then kind of reiterating that message a bit last week when we heard that we're going to, kind of start reducing quantitative tightening and those other, measures that are more dovish. So I think we've been thinking about this environment like a phase. And I've been thinking about, I don't know if anybody's ever had teenagers in their house, but they can go through these phases, which can be weird and erratic and hard to understand. And that's kind of what it feels like right now in markets, is you're having decelerating economic growth. The April data are not that great, but markets are rejoicing because it's reviving hopes that the Fed can start cutting. So we're in a phase that we're trying to get through and kind of ride out right now with those higher quality stocks.
How about on the fixed income side? Do I sit in my 2-year Treasury at 4.84%, or do I take some credit risk out there?
I'm so glad you asked that. Bloomberg is the place to talk about bonds, and I love that. It's pretty remarkable to see some of the volatility in rates. I don't think it's been talked about much. We just saw the 10-year Treasury yield fall by about 25 basis points in just over a week. We look at any backup in bond yields as really attractive right now. You think about the aggregate bond index yielding 5.3%. That's pretty awesome. I mean, that's actually close to the 20-year high of about 5.9% and well above the 20-year average of 3.25%. We like income.
Now, you're doing lacrosse at Marblehead. Is that what I just heard?
That's right. Yeah.
How many summer camps is a cherub going to? What a racket.
They
go to Walt Disney. Are they going to Dartmouth to the Mountain Dog?
We are looking at some lacrosse camps this summer.
Do you have a consultant?
I know, right? It's unbelievable. I need another job.
You do? Yes, you do. Trust me.
Yeah.
But you're looking at, 3 or 4 camps.
Yes, all the elite colleges, of course, will take your children for a week of lacrosse instruction. Doesn't even matter if they're good, by the way.
Textbook's not included.
Exactly.
Does Duke do this, Paul? Duke must have a lax
Of course,
cap.
Lawrenceville does it. They all do it. Yeah. So got to keep those.
I looked up Tabor. I figured the trek from Marblehead down to Tabor near Cape Cod wouldn't be too much. They don't have a lax cap. They take your money in ice hockey.
Exactly. So Marblehead, what's that, like 45-minute drive, hour drive to Boston?
Well, and on a Sunday morning, it's about 20 minutes.
Okay.
But on a Monday morning, it's a different story.
Okay.
12,
they got a
13
great
miles.
folky coffee house up there.
Do they?
It's up there. It's Salem.
It's right on the water, right? Like Salem?
Exactly.
Yeah, it gets warm about July 15th.
Yeah, exactly. That's when their season
We're the
starts.
sailing capital of the world.
Is that right?
Well, some people say Newport, but Marbleheaders claim it's us.
It's like the real sailing.
Real sailing.
Okay.
Hinkley and all that.
Yep.
There you go.
All right.
Do you have the picnic boat? I mean,
that's like my dream boat, Tom.
That's your dream boat?
The Hinkley picnic boat?
Tom Porcelli, when he took his job at PGIM, he asked, and he takes a picnic boat down the Hudson River every morning.
Every day.
My husband's a fisherman then, so he can't have that.
Okay, well, yeah, but a picnic boat, I could see you in a picnic boat.
Oh, right?
Yeah,
let's do Marblehead in August.
We should.
Okay.
Come on up. Remote broadcast?
Yes.
Yeah, Emily Roland, John Hancock, road trip. Thank you so much.
Thank you.
Joining us now, the former vice chairman of the Federal Reserve System with PIMCO, and of course, forever herder of cats at Columbia University within their Department of Economics. It's going to be a 4-hour conversation, and we're only doing it a short block this time with Vice Chairman Clarida, but we'll make it a much longer conversation next time. I want you to recapitulate your Economist article of 7, 8, 9 months ago, where you shook the industry by saying, forget about 2.00%. It's going to be some number higher. Revisit that right now.
Well, thank you, Tom, and always great to be on the show, especially in studio. Yeah, in that essay, I highlighted that I thought the Powell Fed and really global central banks were really aiming to get inflation down to what I called 2-point-something. And the idea was inflation was up to 5, 6, or 7 at the peak, and the goal would be to get it in the zip code of the inflation target, but in terms of dealing with the last mile, to let the economy sort of get to the last mile on its own without another leg up in rate hikes. And that's what I think we're seeing in the U.S. and really around the world.
Is the Fed restrictive now? The polarity of market economists we speak to is there's a select group saying, you know what, they could go up further and then come down, and there's others saying, stop it. They're way above the real rate. Bring it down now. Which is it?
They think they're restrictive. I think they're restrictive. I think there can be a debate on how restrictive. The Fed's thinking, which I think makes sense, Tom, is that the longer they keep rates here, and importantly, the longer they signal they're going to keep rates here, they will become more restrictive. And so, yes, I'm certainly in the camp that they've done enough. And the real question is, how long do they have to keep rates at this level?
Rich, Tom and I will speak to people both in academia and in practice that says the Fed should be cutting now. If you look at the real-time data, inflation is maybe not whipped, but we're pretty darn close, and we should be cutting rates now. How do you think about that?
If I were still in the building, I would not be in the camp to be cutting now. It certainly looked like that was feasible coming into the year, but since the beginning of the year, the inflation numbers have been going in the wrong direction. And also, I think that, especially I think what's relevant here is an element of risk management. So I think there is path dependence. The fact that the last 3 years inflation has been well above target, I think it makes it a harder call to cut preemptively. So I do think, sometimes central banks say they're data dependent and they're not. I do think the Powell Fed now is data dependent, and I think they're ready to cut if the inflation data starts to proceed as they expect.
How do you think this Fed is looking at the labor market? I mean, Tom and I, we kind of throw out this term. It feels like we're at full employment. Everybody who wants a job kind of has a job. Wages are going up at a pretty reasonable pace. How do you think the Fed looks at the labor market today?
I think they see a labor market that is robust by a variety of measures, not just the unemployment rate, but other indications. And that's a good thing, indeed. I think one of the first speeches I gave as vice chair, I made the point, the Fed is not targeting wage inflation. It actually likes it when folks get a nice raise, but raises have to be consistent with the inflation target. And we've gotten some good news on productivity in the last year. Productivity growth is now around 2%, and 2% productivity growth with 4% wage increases, if sustained, gets them pretty close to where they want to be. So I don't think there's a lot of adjustment required in the labor market from here.
If you're joining us right now, Richard Clarida, former vice chairman of the Fed, and of course with Columbia University. You're a certain kind of monetary economist, of course, with DSGE with Jordy Galley. And I think of Meghnad Desai over at the London School of Economics, coming from a totally different world. Lord Desai got so upset about our fiction of equilibrium that he wrote a book about it, 2008, 2009. In DSGE, there's a respect for Walrus in some form of normal equilibrium. How can we measure equilibrium now if we don't have a clue what productivity is doing? I just don't buy it.
Well, I think we measure it with pretty big error, Tom, and you're absolutely right that not just productivity, but a lot of inputs into theoretical DSGE models, R-star, term premia, equity premium are all unobserved and measured with error. So I always thought, and I've said this on your show, and I've said this in the halls of the Fed, models are a place to start, but not to end the conversation. And in particular, folks would criticize, say, DSGE, that they're 3 equation models. Well, I think every economy needs to have at least 3 equations, but there are a lot more. So Tom, it's a starting point, but it's not a destination to get to the answer.
But the 250 PhDs, whatever it is at the Fed,
at least,
they've all studied Clarida, Galley, Gertler, and the rest of it. I get it. They've studied this stuff.
Yeah.
Is it germane right now? Our listeners say, you got to be kidding me. After the shock of a pandemic, a triple stimulus, throw the equations out. Does Chairman Powell have equations now that are effective, that have some form of use?
My sense, obviously, from public comments of not only the chair but the committee, is that they've understood, Tom, for some time that the shock was sufficiently unusual and substantial that they can and they are relying less on models and more on the way the data evolves. Tom, on one hand, the models were telling them that to get inflation down from 5.5 to 2 point something, they'd need to have a big increase in the unemployment rate. And both Governor Waller, Chair Powell, and others said, look, the economy may be different this time. We don't have to assume a big cratering in the labor market, and that was actually a positive development.
I can't say enough, Paul, how I agree with this. And then this is Powell's been hit like a piñata. Powell led saying, do we really trust these equations? And Clarida, who invented the equations at Columbia, Stiglitz, they got their equations. Some of them are real simple, like Stiglitz and Grossman, and others like Clarida, it's Greek to me. Yeah. But the answer is, do they matter right now? And Powell's led on this.
I know, and Tom, one of the key issues for a lot of folks is the consumer here. I mean, there's a tale of 2 cities, if not more, out there with the U.S. consumer. A lot of folks are really struggling, particularly if they don't own assets, whether it's real estate or stocks or bonds and things like that. And how does the Fed think about the consumer here? How do they gauge how the consumer's doing? They look at the earnings from Walmart. I mean, what do they do?
Well, the Fed staff devotes a lot of resources to the consumer, not only at the aggregate level, what is total consumption, but also increasingly during the time I was there, focusing on the distribution, both income and consumption distribution across the population. And there are a lot of things that you can monitor, in particular, how many households are late in their car payments or credit card payments. And so certainly the Fed spends a lot of time on the bottom-up analysis of the consumer.
So again, we came into the year, Richard, I mean, the market was discounting 6 rate cuts.
Yeah.
Now we're down to less than 2. I mean, the market has no idea what's going on out there. Is the Fed, from your perspective, are they happy to say, hey, we've done a lot of work here. We've raised rates. We had a major impact on this economy. Let's just wait and see how our work plays out. Is that kind of where we are, do you think?
That's exactly where they are. In fact, the chair got that question at the press conference, and I'm paraphrasing, but his answer was along the lines of, we judge that policy is restrictive, and we judge that if we keep it here long enough, it will be sufficiently restrictive. So that's definitely their mindset. They're data dependent in terms of when the cut and how many cuts are going to happen, but they certainly judge that policy is restrictive here, and they just have to keep it here.
One of the great moments now in economics, Professor Clarida, is your colleague in crime at Columbia, Joseph Stiglitz, Nobel Prize winner, is out with a wonderful new book, very thought-provoking, should be read by conservatives, The Road to Freedom, Economics and the Good Society. You two are both victims of the Midwest. And one of the great advantages here is Clarida and Stiglitz are like, would everybody calm down? There's a whole nother country out there.
Yeah.
Tell me about policing as Dean of Columbia Economics, Joe Stiglitz. I can't fathom that is your day job. What was it like telling Joe Stiglitz, you will teach this course?
Well, no, look, Joe is a treasure, and I'm actually proud of the fact that when I was department chair back in 2001, I recruited Joe to Columbia. It was one of my big accomplishments. I'm an enormous fan of his research. He's an incredible colleague, incredibly creative, and I just wish we had 50 more Joe Stiglitzes, with or without the Nobel Prize.
Why should conservatives read Stiglitz, The Road to Freedom?
Well, I'm reading it now. I listened to a podcast the other day. Look, it gives, I think, an informed and nuanced assessment of the power that economics can have about thinking about the world if you're willing to step away from the oversimplifying assumptions. And much of Joe's career has been driven by a curiosity about the world and providing a structure to think about it.
How do you think about this U.S. economy? A lot of we hear recently about the exceptionalism of the U.S. economy vis-a-vis Europe. Let's think Germany, or Asia. Let's think China. Is this something that's unusual, this kind of decoupling, if you will, in terms of performance?
That term means different things to different people. What is clear, I think, is through the rearview mirror. Last year, many predictions of a recession. Not only did a recession not happen, but growth was a point above trend, a very hot labor market. I think part of the exceptionalism theme relates to excitement about AI. AI is a big deal. It's not clear if it'll be a big deal in the next 6 months or 6 years, but it is a big deal. And obviously, U.S. companies and U.S. innovation are poised to benefit from that. But there's another dimension, I would argue, in which the U.S. is exceptional, but in a poor direction, which is that we have an exceptionally irresponsible fiscal policy. And if you look at the CBO numbers, they are frightening. Essentially, deficits of 5, 6, 7% of GDP as far as the eye can see. So exceptional in multiple directions, I would say.
One final question.
Yeah.
We have a presidential candidate, a former president, who basically wants to take the independence of the Fed away. From your reading of our political economy, can a single president remove Fed independence?
Certainly not. I think the legal standing of that issue is clear and decided, and I would. 2 points. One, Jerome Powell will serve out his term, which goes through May of 26. Secondly, there are no vacancies on the Federal Reserve right now. So for the foreseeable future, there's nothing for a future president to do on that account.
This has been fun. Did we do okay?
Yeah.
We quality C.
Yeah, gentlemanly C. I'll take that.
Richard Clarida, thank you so much, of Columbia University and of course the Fed, and with PIMCO.
Thank you, fellows.
As well. Joining us right now, Mandeep Singh, to straighten out 15 iPads. Was this a plus day for Apple yesterday? I sort of get this nascent feel, even ex-AI chat. This is going pretty well for Tim Cook, right or wrong?
Well, the China numbers, I think, that came out were positive. Everyone was really thinking of a worst case scenario. So that obviously is not the case. And in terms of their iPad launch, look, I'm a software guy. I get excited when I see new apps that leverage
come on. You're so excited about 3 nanometers M4 chip.
I am.
I mean, it's what you and I talk about. We geek out on that.
Google has already shown that, as well as they have incorporated a large language model that takes advantage of that 3 nanometer chip. Apple didn't do that. So that's the gap they got to plug in their developer conference.
Everyone knows the guy that tells me what to do, Mike Bloomberg, he's going to get the new iPad. He's going to get the best one. So will John Tucker, because Mike gets one. So John Tucker's going to have the fanciest iPad out there, and it's going to say, let's do AI. What is John Tucker going to do on his fancy new iPad with AI?
The first thing he will do is to engage with Siri. The one product that Apple has done nothing with.
He doesn't know what that is.
So look, I think that's the biggest use case for AI. If this thing is real and you can, engage with it in a productive way, it has to manifest in a voice assistant.
Let's be clear here. Tucker doesn't engage with his next door neighbors.
Much less Siri. So, all right, Mandeep, what I did not hear yesterday with the iPad was really anything AI. I'm banking on this June developer conference.
Yeah.
And I need to see something that says Apple is in the AI game. Am I going to get that in June, do you think?
I think so. And the pressure is on them to incorporate it in the next version of their operating system. Google has already done that in terms of integrating their smallest LLM with their Android operating system. That's what developers want, because then you can build new functionality on top of it, roll it out in apps. But if it's not there in the development kit that Apple has with their operating system, it's so hard to build.
Okay, so to Paul's perfect question about what happens in June here, the bottom line is yesterday they brought out Logic 11, the music software, and it has 3 new things that are what I'm going to call AI-ish. I still don't understand, how many iPhones are in my family, Paul? 7 with vet bill? I don't understand what AI is going to do to various and sundry children's iPhone. Is it going to have them spend less at the department store?
Well, it could. I mean, look, the use cases of this are pervasive. That's what we are learning in terms of the companies trying to pilot new applications. How it's going to drive that 7 people upgrade in your family. It's going to be a function of, can I run this operating system just on that latest iPhone or iPad, or can I run it on that old iPhone? Right now, all the operating system upgrades that Apple rolls out, I can run it on my iPhone 11 or 12. Why do I need to go to iPhone 15 or 16? Because
can you come over for dinner today?
Explain that to the troops. All right, I need to, when I'm talking Apple, if I'm a shareholder or prospective shareholder, I have to have a call on China. I don't have a call on China. I don't think this is a good story for Apple. It's 20% of their revenue. It's a big part of their supply chain. I don't have a call there. What do you think the call is on China for Apple?
I mean, there's no doubt it will be a decelerating business to the extent that right now it's 20%. It's going to be 15% a year from now or 2 years from now.
That's not good.
No, think about it. 5% of a $400 billion revenue base. Yep. That's a pretty sizable number. And where do you make up? Even if Apple is gaining share in India or in other markets, it can't make up for that 5%. So we're talking about big chunk of revenue leaving just because you don't have that market anymore.
So what do the bulls say about that? I mean, if we had Dan Ives in here, what would he say about, I'm going to lose, that's $20 billion of revenue that's just going poof.
Well, so the bulls would argue, it's going to happen at a much slower pace,
Okay.
and Apple will continue to launch,
Right.
new products where they will have higher ASPs. ASP growth is still the bull case for Apple.
Then
Average selling.
We got to go on this breaking news, and we're thrilled to have Mandeep Singh with us, expert on this. Da 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 da. Intel misses for the 4,000th time. Intel sees second quarter revenue below midpoint of blah blah blah. It still sees fiscal year revenue to grow year over year. Is there a new Intel, or is it the same train wreck you and I have covered for a decade?
I mean, we're talking about a company that is going through a transformation, and we know transformations are tough when it comes to technology.
Yeah, so's
especially
the
on the
Republican Party. Come on. When do they need a new CEO to fix this thing next?
No, I think he's pulling all strings in terms of trying to revive the company through different aspects, foundry, chip making. It's just when you are behind in the chip business, it's very hard to catch up. And that's what Intel really rode on for the 25 years they were at the pinnacle.
Is Joe Biden helping or hurting Intel by his semiconductor expansion?
I mean, clearly the government is helping Intel here in every possible way in terms of the CHIPS Act disbursements and just allowing them to, do what they can in terms of catching up. Intel getting the ASML equipment, that being the latest news, that's a huge deal because they missed on the EUVs. Yeah,
we're running out of time, Dan.
Yeah.
Chris Miller, chip war. Okay, ASML's over in the Netherlands. They got to sell to everybody. How does Intel use ASML stuff versus how Taiwan Semiconductor uses ASML stuff? There's got to be a difference.
I mean, ASML is coming up with a new and better machine every 3 months or every 6 months. Who do they give those machines to? Obviously, they're going to sell it. If Intel gets a preference, that helps them narrow some of that lead that TSMC and other fab makers have. So clearly, getting hold of that machine, which is in hot demand, clearly makes a difference.
Were you impressed by my question there?
That was very good.
I got it from John Tucker.
Nice. He's all over this stuff.
Saying, thank you so much. Mick Mulroy joins us right now. Senior fellow of the Middle East Institute, a nodding acquaintance with public service to the country, former Deputy Assistant Secretary of Defense for the Middle East at Defense, and also his effort with the Marines over many a year. Mick, thank you so much for joining again. I believe, Mick, the way they do it in the Marines is they say, get out the map. I don't think enough Americans have gotten out the map of southern Gaza, 3 miles from Rafah up to a Mediterranean Sea as a constraint, and maybe 9 miles south to the tip of Gaza into a desert in the middle of nowhere. If your world is the study of degrees of freedom, where do those people move in Gaza?
So it is very good to be with you guys as usual. It's very difficult. There's no doubt about it. The population that we're talking about inside Rafah, the over 1 million, so about 1.3 million, are largely there because they've relocated from other areas of Gaza, including all the way up to Gaza City, Khan Yunis. And now I think where they're looking is a coastal area, predominantly because Hamas isn't in the coastal areas because you can't dig tunnels there. So they're trying to move this large population, and I think around 50,000 have already moved in the last 2 days, to this area to get them out of the path of either a full-scale or limited ground operation to basically address the last 4 battalions of Hamas terrorists in that region.
You mentioned 1 million people, take away 50,000. I'll let Mick Mulroy do the math, but the answer is, in the next coming days, how do you move that many people? I can't visualize it. Mick, help me.
So it will be difficult. I've seen some assessments it would take up to 12 days, but if you do your math, it doesn't seem to add up right now. But the other thing I'd point out is Israel doesn't have to set an arbitrary timeline. Their timeline could be, if they elect to do the Rafah offensive, and there's certainly some serious opposition to this, but if they're going to go ahead, they could base it off of when civilians are out of harm's way, because it does look like they are voluntarily moving, and some, quite frankly, really quickly. So I hope that if they do go ahead, and that's obviously a choice that they're going to make, that they do allow all the civilians that they can get out to a location where they can also receive humanitarian aid. It's obviously difficult to convince people to move to a place where there's no food, clean water, or the medicine they might need. So it is a very complicated situation to point of your first question, but it needs to be done if this offensive is going to take place.
Mick, after the October 7th attacks, the Israeli government said their strategy was to basically eradicate Hamas. We're 7+ months into this. Is that even possible? I mean, we asked that question 7 months ago. Is that possible? 7 months into it now, is that even possible?
So that is a good question. You can never really eradicate a philosophy, which means people can join Hamas or whatever comes after it. I think they should have been more specific and certainly given the IDF more reasonable objectives, which is to the military destruction of Hamas, which means obviously taking out the military leadership, depleting their soldiers, if you will, their terrorists, but also destroying the weapon systems that are so dangerous to Israel, and these tunnels, which are a strategic problem that most militaries have not faced at this scale in this type of operation. But if they could degrade those significantly, then I would think that would be a reasonable objective for the IDF. Destruction of a philosophy, a terrorist organization. We've seen it with our efforts in 20 years. We have not done that. So that is not likely to happen.
And Mick, Peter Baker in the New York Times, and among many, many other headlines, including Bloomberg, the President of the United States puts arms shipment to Israel on hold. What does it actually mean?
So if you look at the growing, I think, concern, but not just the White House, but even in the Pentagon, about how the war was being prosecuted, a lot of it has to do with the use of large diameter bombs in urban areas. So 2,000-pound JDAMs has a kill radius that is substantial. So even if you're targeting militants in one particular block, you could be taking out 2 or 3 blocks. And I think that has been some of the major concern. Those are what the weapon systems, I think, that have been stopped from going to Israel right now because of this Rafah offensive. It may be in the future they condition it. You can use these weapons, but not in Gaza. I don't know if we're there yet. The quickest way to do that is simply stop those weapons from being shipped to Israel right now, right before the Rafah offensive.
All right, Mick, just strictly from a military perspective, how do you think this plays out? I mean, if your goal is to get every last Hamas fighter, you could argue no end in sight here. How do you think this plays out from a military perspective? Because the Israeli Defense Fund, they know what they're doing.
They do. Absolutely true. But you're right. You're never going to get every Hamas fighter because every day there's new Hamas fighters. And as soon as you leave, there'll be new ones. So I think it is really to go after their capability to wage violence against Israel. So major weapon systems and every other weapon systems you can. The leadership, because leadership really matters. I mean, we could see that on October 7th, right, unfortunately. And these tunnels. These tunnels do give them a capability that is unlike most terrorist organizations. So I think if you can degrade that to a point, and then you have to come up with a plan that is attainable and sustainable when it comes to ceasefire. Because everybody's talking about it now as this is what Israel needs to do. But the question is, as soon as they sign the agreement, how long is it going to take for Hamas to then violate that agreement? Because their purpose in life is to attack Israel.
Mick, I got to squeeze this in. Your effort is My Star in the Sky, about children forced into soldiering in Africa. This is something you've really led on worldwide. Just quickly here, how big is this issue?
Well, thank you for bringing it up. It is a big and growing issue. In the last few years, it's doubled with the amount of children being forced to fight in the Middle East. The issue you're talking about is a documentary that me and my partner, Eric Ulrich, did on the Lord's Resistance Army. It's being made into a book. It is made into a book, and it came out yesterday. Right. So I really appreciate you bringing that up because a portion of the proceeds goes to our NGO in child soldiering, which really addresses this issue, not only to stop it, but to help rehabilitate those children that have been forced to fight. And that needs to stop immediately.
Mick, Thank you. Mick Mulroy with us there on Gaza and what we see in Rafah. Mark Sullivan's All the Glimmering Stars is the book.
This is the Bloomberg Surveillance Podcast, bringing you the best in economics, finance, investment, and international relations. You can also watch the show live on YouTube. Visit the Bloomberg Podcast channel on YouTube to see the show weekday mornings from 7 to 10 a.m. Eastern from our global headquarters in New York City. Subscribe to the podcast on Apple, Spotify, or anywhere else you listen, and always on Bloomberg Radio, the Bloomberg Terminal, and the Bloomberg Business app.